Hello traders, Gary Wagner here, a little bit after 11 a.m. in Honolulu, a little after 5 in New York City. It is Tuesday, the 8th day of May, 2012, and this is the Daily Report for Gold and Silver. The best way to characterize today's trading activity, not only in the precious metals markets, but in the equities markets, pretty much across the board with everything except the US dollar and treasury bonds, is a global meltdown. We have seen triple digits again in the equities, Dow Jones Industrials. Gold broke through that critical support level that we've been talking about. On the close, before the afternoon session, we closed down $33.70, 1605.80. The low, $15.94.40, high $16.39. Down off about 2%. Down off about 2% in silver by 62 cents. Closed at $29.57 with a low of $29.06 and a high of $30.16. Here's what we're looking at, traders. We'll start with our weekly chart in gold. As you can see in this chart, there's a couple of things that are apparent, but the first of which is that we have broken through two main levels of support. What do I mean by two? Well, the first is when we create a Fibonacci retracement and we start from 2008 all the way up. You notice that what we have marked out here is a 23% level, and that is 1639. In fact, the high of the day. You can see that's as high as the market ever got. The market, when it broke, it did break down hard and pretty solidly. Second line, we have a long-term trend line that we have drawn in here. It's part of this triangle correction that at this point, not so much has become invalidated, but it is a bear wedge or a bear triangle. We see the breakout is to the downside here. But when we take a look at this compression itself, you can see that this long-term trend line, the support line down here, and that's really being fixed off a couple of main points, as you can see right in here, and of course the low. But we have had a significant break below that. Does that mean that the market's going to continue lower? Well, not necessarily, but it is an indication of potential lower prices. There's no doubt it has broken through that support line. And when it broke through hard. When you consider the high at 1639, that's right in here, the top of this 23% retracement level. And when you consider not only did it go through there, but it went through a longer term trend line. And this is a fairly, in my opinion, a fairly significant trend line because of the magnitude or the length of that line itself. So it broke through that too. Now, could it trade back up and still be valid? Well, this is an art as well as a science in terms of technical analysis and charting patterns. Of course it could. Does that seem likely at this point? Well, right now the probability is for a strengthening US dollar as we have a crisis developing over in the European Union. That is a significant crisis because there's a basic change in leadership, and the leadership has a different view or vantage point on what they want to do about the current austerity measures. And so there's a lot of uncertainty in the air, and that is what we're seeing. When we take a look at our daily chart, I've got a long-term view at first. You can see how it's broken through. This is a Heikin-Ashi, and you can see really how strongly it did break through. What I'm going to do is, as a daily chart, I'm going to remove this study, which is going to give us a much better view of really the kind of breakout to the downside that we saw today. As you can see, this market was able to really, by the slimmest of margins, maintain a standing above this support line. Here's resistance, and you can see a significant break below that point. On today's report, we will also look at points in which I think we will genuinely find support in the market. And to give you a quick answer, the first major level which absolutely needs to be held, this is that 1520 low. I'm trying to line this up so that it's straight. It's not perfectly straight, but this is that 1520 low that gold reached after trading to this pinnacle high of 1920. It comes down, it tests one area, and then it makes this lower low. This lower low is a critical level of support, and it's one of the next levels we're going to look at. The other level that you want to pay particular interest to is this top right in here. If we carry it over, you'll notice that that is pretty much where the market is trading right now. So will it hold this level of support? Right now, I can't tell you that. I can tell you that it is at this level of support. If this holds, that's one thing. If it doesn't, the real next level of support, strong level, is $80 below this particular point. Because as you can see, there's very little technical data in between these two levels. We have one other top, which is really right in here. Let me see if I can add that in. So in terms of the different strategic areas we want to look at for support, it's going to be just under here, which is about 1580, and then about 1520. Now, what's it all about? Right now, it's really about the strength of the US dollar. In terms of safe haven buying, we're not seeing that. We're seeing risk off in terms of the way the market's reacting. Most importantly, we're seeing a flood of money going into treasuries, and the belief, I believe, well put belief, that treasuries are really the way to go when there's absolute uncertainty. The U.S. economy is one. Even though we have a large budget deficit, we have the grandest, the largest, the most magnificent GDP in the world. We are a producer country, and when the chips are down, you can always count on the U.S. economy having the greatest likelihood of recovery and stability. Dollar index, Heikin Ashi, still really straightforward all the way up. When we remove this as a study so we get a better idea to a straight candlestick chart, the first thing you're going to see is we have this big gap. Will the gap come and get filled? It typically does. We have another gap here. You do get them in this particular market. But you can see it hasn't closed really near the highs, but we are right now in terms of a technical basis, because on a fundamental basis, the US dollar is strong. But in terms of a technical basis, you can see this one band or area, and this is going to provide resistance for the US dollar on a technical basis. Silver. Well, silver, as I spoke about yesterday, continues in this downward channel, in this downtrend. The area that I'm looking at, I told you I was looking for about $1 lower in pricing, 28.89. This is your next level, 76% retracement area. That is the most logical place to look for support. I think that between here and there, it's probably got clear sailing all the way down to that area. At that point, we would have to see exactly how the market wants to react and exactly what we were looking at. Now, there's one other retracement that we can put in. Let me go ahead and draw that for us, traders. And traders, what I've done is I've moved the Fibonacci retracement from a short term and created a more long term, in which we're accounting for the second time we reached about $50 in the history of silver. And the reason for that, in terms of long-term major support, 25.77, just above that, you can see that these are some intraday lows that we got in silver. Do I think that it's going to go that low? I'm not convinced yet. We're going to have more data. As I said, right now, I'm looking for the market to test the 28.89 area. But in terms of long-term support, this is the area you want to look at. And then right in here, and you can see that they match fairly close. So it's right within this particular area that we would look at for support. 28.89 first area. Second area is going to be about 27 right here, and then major support at 25.77. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.